Fed is getting ready to kick off a two-day meeting. Joining us now on the markets, Ellen Hazen, portfolio manager at FL Putnam Investment Management. And covering the economic angle, Ian Shepherdson, chief economist at Pantheon Macroeconomics. You've been negative for a while. Yeah. You hate these tariffs. You hate the trade war.
I hate the trade war.
Yep. Friday, you're even trying to backtrack on what you're calling that. It's either a fluke
or real. One of the two. I don't like
reading your stuff,
bets.
though, you seem inclined to think it might be a fluke and that consumer spending is at a last gasp, or you mentioned it's a marathon, not a sprint.
Yeah,
You're worried.
well, the holiday season, there's a lot of numbers flying around. Most of it looks positive for the immediately after Thanksgiving and Cyber Monday, but it is a long season, so we don't know yet. The evidence is very mixed, and I don't like to prevaricate, but we've got a bunch of business surveys that are very weak, yet we've got payroll numbers of the last 2 months that are pretty strong, and there's no real way to reconcile them. Consumption's okay, but it's not going to charge on the way that it did in the spring and the summer. So there's a bunch of cross-currents swirling around. The trade war continues. We're still wondering what's going to happen to the December 15th tariffs. We just don't know yet. So I hate sitting on the fence, but unfortunately, that's kind of, I think, the most sensible place to be at the moment.
It may not be either or. It may be a little of each.
It might be somewhere in between.
But even if it's somewhere in between, either way, what's happened in the stock market, you would have to say there's a disconnect there, regardless of whether it's
there is.
You think that's way ahead of itself?
Well, the Fed is very easy again. We've had rate cuts.
That's what's doing it.
There's a ton of liquidity going in from the Fed as well, and they don't want to call it QE, but to me it kind of looks like QE. Bank reserves are being pushed higher, so we know what happened last time they did that. So, the market, I think, is okay. It's not insanely overvalued. I never really bought this recession story back in the summer.
You didn't?
No, I didn't buy that. That was massively
Although
overdone.
you sort of thought muddling along, in your view.
Muddling, and I still think muddling along is kind of the most likely single outcome, and that's not terrible, but it doesn't really justify the market taking another leg up from here in the short term.
Ellen, that's not your job necessarily. You can find things to buy that will outperform. That's more what you're interested in, isn't it?
We're seeing that the economy continues to have a strong consumer, even though the industrial portion is definitely weak. And in light of the strong consumer, which continued with the strong job numbers last week and the retail sales numbers that we saw over Thanksgiving and the holiday season, we think that you can be overweight consumer discretionary. We can think that you can be overweight some parts of tech. And the fact is that the consumer is seeing real wage growth over the last 18 months for the first time in years. And so it doesn't need to be either or. It can be and. It can be both. It can be that the industrial economy is soft, as evidenced by the PMIs and the business surveys, even while the consumer is doing okay. And as we look into next year, we are seeing that you're going to have the lagged effect of these Fed cuts. You have 60+% of Fed central banks easing globally. And all of that should provide some stimulus.
Can I just ask a technical question for over the next 2 or 3 weeks? In terms of there's always this argument that certain investors want to own certain names going into the end of the year so they can show that they own the names. And there's another view that people want to lock in certain gains. There's obviously all sorts of tax game. I don't want to call them games that are being played, but people are trying to be efficient with their money. How does that play itself out in terms of what you think? I mean, in terms of how the next couple of weeks play out? I know nobody here likes to think this short term, but I'm just asked the question.
Well, nobody wants to be in the 2-week forecasting business.
Right.
These technical things, market quarter end, year end, they're real things, but they can be outweighed by news. So, if something big blows up in the trade war, positive or negative, in the next couple of weeks, that can blow away all these technical factors. And right now, we're in an environment where that actually could happen, because we are going to hear something about these tariffs on December 15th. I think the market's pretty much priced in the idea that they won't happen, but we haven't heard anything, and time is running out. And if the announcement comes, we're going to do it, that's going to swamp any technical positives for the market, for a day or two anyway.
All right. Microsoft, Adobe, what is that? That's Lam?
Lam Research, yep.
Okay, you like those. Overweight. Doesn't mean they're going straight up, but even if the market is flat, these will do better. If it's down, they'll go down less. I mean, that's where you are on the.
That's exactly right.
Bank of America, BlackRock.
Yeah. As we're seeing the banks continue to do well, and corporate lending is doing okay. Credit costs have not become a problem, and we're seeing very few signs of speculative excess in the banks, and those stocks are very cheap. So Bank of America is a name that we've owned for a long time and looks particularly attractive going into next year. And on the tech side, certainly Microsoft, as we've seen with the Azure business and the overall pivot to the cloud, has been very successful. And Adobe is a company, it's a secular grower. It benefits from migration to the cloud. You have free cash flow that's 150% of net income, so it's not nearly as expensive as it might look on a simple PE basis. And the return on invested capital is 50% higher than their cost of capital. When you have a company that produces that kind of cash flow year in, year out, with over 20% revenue growth, that's a pretty straightforward story. Doesn't mean it'll be straight up. Certainly between now and year end, who knows? But over the next 12 months, absolutely.